Welcome to BigONE Weekly News Update. I'm Mia. The past week in global financial markets was defined by steady, measured movements and a growing sense of anticipation ahead of the upcoming Federal Reserve meeting. While U.S. and European equities continued to post incremental gains, crypto markets remained largely range-bound, with investor sentiment subdued. Shifts in liquidity conditions, evolving rate cut expectations, and mixed macroeconomic signals are collectively shaping a cautious yet attentive market environment. Crypto market. Stability masking underlying weakness. The crypto market exhibited limited directional movement throughout the week. Bitcoin traded between $85,000 and $94,000, ending near $90,400 with little change from the prior week. Ethereum recorded a modest 0.3% rise to $3,060, while Solana declined 0.9% to $132. Underlying these muted price moves is a notable reduction in investor engagement. Bitcoin ETFs saw 6 consecutive weeks of net outflows, the longest such stretch since their launch in January 2024. This sustained withdrawal of capital suggests a persistent lack of conviction among institutional investors. Correlations across risk assets also continue to evolve. Bitcoin's relationship with the Nasdaq has weakened materially over the past 2 months, with its performance increasingly mirroring the Hang Seng Tech Index instead. For investors who classify both as peripheral risk assets, their parallel declines illustrate a broader pattern. As liquidity tightens, capital is being systematically reallocated from higher-risk markets back toward core assets. Global equities continued gains despite Treasury weakness. Global equity markets extended their upward trajectory. In the U.S., the S&P 500 rose 0.31%, closing in on its historic peak. The Dow Jones advanced 0.5% to 47,954.99, while the Nasdaq logged its 4th consecutive day of gains to finish the week 0.91% higher. The Russell 2000 gained 0.84%, signaling improved sentiment towards small-cap stocks. In Europe, the Stoxx 600 added 0.41%. Despite the resilience in equities, the U.S. Treasury market experienced its worst weekly performance since June, with yields rising across the curve. This divergence reflects persistent uncertainty surrounding the timing and magnitude of potential rate cuts. Among commodities, copper and silver led gains, supported by improving industrial demand expectations. U.S. economic outlook. Data reinforces rate cut expectations, but adds complexity. Recent U.S. economic data reinforced the market's expectation that rate cuts are likely, yet also introduced additional uncertainty regarding the broader economic outlook. As investors look ahead to next week's Federal Reserve meeting, 2 central questions dominate market discourse. Will more Federal Open Market Committee (FOMC) members oppose rate cuts? Will the 2026 dot plot reflect a greater number of expected cuts? The September dot plot projected 1 rate cut in 2025, an outlook increasingly viewed as inconsistent with a weakening labor market. Should policymakers choose to retain a conservative stance, markets are likely to interpret the outcome as hawkish, potentially tightening financial conditions. Current market expectations point toward a scenario characterized by a hawkish rate cut paired with a quasi-quantitative easing (QE) approach to liquidity management. Over the past month, rate cut sentiment has swung repeatedly, shifting from optimism to pessimism and back, underscoring the fragility of investor expectations. Reports over the weekend further indicated that Kevin Hassett, widely regarded as the shadow Fed chair within the incoming administration, and President-elect Trump's economic team may be reevaluating their previously aggressive rate cut stance. This development adds yet another layer of uncertainty to next week's meeting. Dollar liquidity. Improving conditions offer potential support for crypto. Dollar liquidity improved at both macro and micro levels. Broad liquidity pressures eased, while the U.S. repo market normalized following month-end distortions, returning to a tight but stable equilibrium. Crypto markets, having experienced a cumulative decline of more than 30% over the past 2 months, may find support if dollar liquidity continues loosening. A stable or slightly weaker dollar, combined with rising global liquidity, could provide favorable conditions for a year-end recovery in digital assets. Global markets are entering a decisive period. Equities continue to display quiet resilience, even as Treasury yields rise and macroeconomic uncertainties grow. Crypto markets, in contrast, remain directionless, constrained by weak investor participation and shifting liquidity dynamics. At the center of these crosscurrents is the upcoming Federal Reserve meeting, which is poised to shape sentiment across asset classes for the remainder of the year and into 2026. The critical question is whether the Fed will signal a more accommodative path that aligns with market expectations or maintain a cautious, hawkish tone amid economic ambiguity. The answer will determine not only the trajectory of traditional markets, but also whether crypto assets can stage a credible rebound after months of subdued performance. Join BigONE today and take advantage of the growing cryptocurrency market.